The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out our show like we usually do with the German DAX. This is a 15-minute chart, and I happen to know that one of our den folks was very happy with this chart. You'll notice the first 1.618 expansion that we had yesterday. Actually, that was it was yesterday. But you'll notice the drop into that came all the way down to 12,500. But what's interesting is that drop is exactly equal to the drop that we had this morning that stopped exactly at the 61% level. I mean, exactly the 0.618 level, and also it's confirmed by the 1.618 expansion that is there. So that's a nice thing to trade. It has a little more volatility lately than the S&P, but the S&P is starting to pick up a little bit because we've had two 14-point swings now in the S&P over the last few days, and that should be interesting. And we'll have Bill Meridian as our guest at the break. And our good friend Shane Smolian from wolftrader.net has given me 3 charts to show you today about the market. We're going to try to have him on next week, and we'll take a look. But let's look at the DAX here on the hourly basis. You'll see that same type of chart, but what you'll be able to do is you'll see it on a little bit bigger time frame where the targets could be just a little bit higher. And you'll notice that we could get all the way up to that 12,750 area. Okay, now the main thing that I'd like to do next is to take a look at the DAX on the daily basis, and we'll bring this one up here, and you'll see that we are still hovering up here the last 3 days in a row right near the same high. Neither nuclear bombs or anything else stops these things. Of course, the hurricanes don't affect the German market. Anyway, as you can see, the DAX index comes up here. Folks, the DAX index will be really affected come Sunday night when the election comes through for they're expecting Merkel is a 98% chance of winning. Mr. Trump was a 95% chance of winning. So if you take the opposite side of the bet, if you bet 600 pounds, if you bet 600 euros on one of the opposition, it'll pay you 10,000 euros if she doesn't win. That's a gambling bet, but I wouldn't do that. So anyway, that's what they're looking at. Let's take a quick look here with what Shane sent us, and that is this is the first time in a long time that the Fed has given us a situation where hold on just a second. Let me answer this question. Yes, the odds come from the bookmakers in London. I don't know if you know this, but there's hundreds of those across London, and they're tax-free. If you win, you don't have to pay any taxes. So that's called, and then they have the future stuff is spread betting, and it's pretty much, the same thing. But let's take a look here at this chart that Shane has forwarded to us. It's the first time that we've had the Fed juice actually declining. And it's coming at a time when we have some planetary things that look really interesting to see. It's going to be very interesting. He covers this in his latest newsletter. So if you have an interest, you'll get in contact with him for that. He's also forwarded to us a chart on the bond market, and we'll get this up here so that we can take a look at it here. And here again, you'll see that he is showing a big move down to this area, and now we're about ready to have this a little bit of a bounce through here. So we're going to see what is going to happen. But you can see here that the Fed has definitely, with their market operations, have backed off a little bit, giving markets free rein to do what they're usually supposed to do. So That's, I think, is rather important. And finally, the one that we want to look at here is the gold, because we are at the proverbial moment of truth here in the gold. And I'll post up what Shane is showing us today. And you'll see here that the Fed juice has backed off substantially. And the recent decline in GLD was picked up perfectly by the Fed juice. And now what is to do next is we're setting right on some major support that we're going to cover as we come in here. This is the time of of course, the autumn equinox. We're 2 days away from the new moon, and there's just a lot of things going on, astrologically that could be interesting. And the gold is extremely interesting. And let me give you my 2 cents worth here. And it might be overpriced at that, but let's just take a look and see where we are here, if I can find it. And oh dear, I am going to be upset if I can't find it. I worked so hard on this thing to get this thing up here. Shut the front door and raise the rent. Did I get it right? No. Just a minute here. Oh dear. Well, I'm going to have to get it for you at the break, because I can't find the darn thing. Let's move on to 2 markets that are in real serious trouble. The first one right here is copper. First of all, it is extremely oversold. We're down almost 3 weeks now without any major rally. We had that little 3-day bump here earlier in the week, and now we're trading below the 292 level. This tells us that we're going to go all the way back at least to the 280 or 270 level, most probably 270, because that's the 1.618 expansion, and it's also a 61% retracement off the low in April. So copper just doesn't look very good. It hasn't ever since it completed that big ABCD up there on the 16-month chart that completed at the 315 per pound level. So that's going to be an interesting one to watch. We should watch for a rally in that because I think it's important. Folks, earlier in the week, the first thing I did this week was to reiterate the fact that Apple just looks terrible on a technical basis. Has nothing to do with iPhone 8 or iPhone 10 or the fact that they got $200 trillion or billion dollars in the bank. Has nothing to do with that. This is just a technical pattern. It's perfect. You have 2 1.618 expansions on the weekly going back to 2012. And if you look at the daily chart that we've had several times, when we were watching this on Monday, we were trading at almost 160, and now we're trading at 152. This is certainly, and this is in the midst of, their iPhone coming out. The problem is, the iPhone is not being accepted nearly as rapidly as they had hoped. In fact, this morning on Bloomberg, they were talking about the Asian market was really soft to the iPhone. Whether I don't know what that means or not, but that could be the reasoning that the stock has got down, to the 152 level. Now, the 152 should be pretty strong support in Apple because you're looking at a 61% retracement of the July 10th low. So once you get below the 145 level in this, which would be equivalent to what we dropped already this week, you're looking at something really serious in Apple, somewhere around 125. 877-927-6648. I'll have that.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Caller from Philadelphia. John, are you there?
Good morning, sir. Thanks for taking the call.
It's my pleasure, my friend. How are you today?
Very good. I will tell you I anticipate that conversation with Bill Meridian in 15 minutes, so thanks so much for scheduling that. You whetted my appetites when I shared just a personal position trading tactics in soybeans, and you cryptically wrote in the Tiger's Den, Cy Monley, who you've interviewed as well, very gifted person, was looking for a higher price. I'm calling to ask if you could elaborate the whys and wherefores of his idea, please.
I certainly will. What I'll try to do is I'm in contact with him daily, several times a day, and I'll try to get him on the show next week. But what he was talking about a few days ago, they have a whole system of weather and drones and, just all kinds of stuff that we don't have any access to, to try to get a handle on, what the crop is really like, because they really don't trust USDA reports. I mean, they're close, but, considering what some of these private firms can do, they can really do a masterful job. And what he was saying, it was a little bit over my pay grade, but I understood it a little bit. And that is, it's something about the moisture content of the beans coming into this type of the year. They're finished, the basic part of the growing season is over now, and they're waiting for harvest. But this has caused problems in the past with some type of a mold or something like that drops the yields dramatically and makes the quality of the bean, not nearly as robust as they'd like to see. And since we're seeing this big move in soybean meal these last 2 days, maybe some of this is being picked up by other sources. That's all I know, John, as far as, and believe me, that's not inside information, but that's what he was saying. And he said if it gets really bad, he said, like it did, I think he gave me 2 other years where something like this had happened, and the beans rallied several dollars a bushel. And So that's all I know, because we've been looking at that from a position spot, but he has information that we just don't have access to, and that's what he told me, and that's all I know.
Thank you for sharing. Just for the benefit of your audience in the Tiger's Den, I posted up the weekly soybean chart. Mm-hmm. It clearly shows a price pattern of basing. That's number one. That type of pattern I've seen many times before. And just for reference sake, this weekly chart goes back 3 years. And what it shows is anything under $9.80 down to $9 is finding good buying and price lows. Cy Manley with Sylvius out of Indiana. I researched the history of Sylvius, and they have extensive history as crop insurance providers, and Cy, of course, described to us the elaborate software systems they have for the benefit of their producer farmer clients. So it's clear to me their market intelligence is very, very deep, and they've been at this game very, very long time. So that's very helpful. And just in response to what you shared, Cy speaking or telling you in the past days, just about the yield potential, or perhaps better said, the yield shortfall potential, is something I mentioned when we spoke yesterday or the day before. Namely, it was back in the crop year 2010 that during August, the crops looked terrific, and the USDA was estimating very large crops. And what turned out to be the case was that growing conditions in the last 3 weeks of August into September turned adverse in a way that you couldn't see any threat to the crops itself looking from the roadside. But once the farmers actually harvested the crops, weighed it, and started selling it into the markets, the results came and showed that the crop size was actually like 10% smaller than what the market had guessed. And from September 15th into the end of the year of 2010, prices of corn and beans rallied very significantly. So 2010 was a real-life occurrence of the phenomena that I think you're describing, what Cy is guessing is occurring right here. So I hope that's of help to you and your audience. Just thought I'd share.
Thank you very much, John, and I think that's what it is, and we'll try to get him on next week. He has a busy schedule, but he's always willing to help. He was his first job, his first employer was Rich Anderson, so he's always appreciative of that. So we'll do our best to get on. But thank you for calling in. I really appreciate your input. It's always great.
Thanks in advance for having Bill Meridian on. That'd be terrific.
Yeah, that's always a lot of fun for sure. Okay, thanks a lot, buddy. We'll talk to you later then. Okay, folks, let's take a quick look at this gold chart that I posted into the room here. This is a really interesting chart, folks. Remember, we were looking for gold to come down to that little below the 1,300 level. We got down to 1291. We're now trading at 1297. That's almost exactly two harmonic numbers down. We went $5 more on the downside than I would have hoped. We went $73 lower. I was hoping for $68 lower, but now we've tightened up this range here over the past 15 hours of trading, and now I think the risk on gold here is very, very small. So I would really think there's got a good chance here for gold to rally. Now, how much of a rally should we get? If we're in a really bear market like this chart could be anticipating, we're only going to get about a $17 rally off of that. That would take us up to the 1308 level. That would be all we would get. That's about about $10 from where we are right now. But if it's a little more bullish, we could get $34 off the low. So 1291, that would take us up to around 1327. And if we get above 1327, then we've got game, because it could be a lot better. But this is a very technically a perfect chart. As you can see, the ABCD swings on the way down. They're just about spot on, as you can see. And we are setting at some major support. And this is where the market should bounce, in addition to the fact that we had that new moon the other day that I think pushed this whole thing down, and now we've started to consolidate in this level. And we'll see what's going on. People have asked me about gold reacting, to this thing in North Korea and stuff. Folks, some of the best moves that gold has ever had have been opposite to what they're thinking. And the main one was, back in 1980 when the Iranian warships hit Iraqi nuclear power stations. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we've got Bill Meridian from Cycles Research, Vienna, Austria on the line. Bill, how are you this morning or the afternoon for you?
Very well. Thank you, Larry.
Hey, thanks for coming on, pal. We really appreciate it. We really enjoy your stuff. So I've started off with your little paragraph about Paul Montgomery. You want to start there?
Oh, yeah. This is the, I guess this is the special vernal equinox show?
Yes.
Because today's the vernal equinox.
Yes,
So
I'm having a big party today.
Is it going to be €1,000 for 3 people for food?
You have to tell the folks what you had to pay, or what someone took you to dinner last night. That's insane.
On Wednesday night, one of the former executive directors for the Abu Dhabi Investment Authority was in town. He is usually twice a year in Vienna. And he took my wife and I out to dinner, and the tab for 3 people for dinner was €1,000, which is $1,200.
Wow. And you don't drink much.
I don't. They drank the wine. I didn't.
Wow.
I don't drink at all. Anyway, today is the 22nd, and at 4:02 p.m. Eastern Daylight Time, the sun will denote this annual event. It will transit into Zero Libra. And it was the late, great W.D. Gann noted that markets tended to reverse in these days. Now, for my old friend Paul McRae Montgomery, and I have a story about him too, from Montgomery Capital Management in Virginia, I know that there was physical support from the Yale Medical School Department of Neuroanatomy. They discovered that the human nervous system typically undergoes measurable perturbations during late September and into March. More recent studies found that violence tends to spike prior to the autumnal and vernal equinoxes, as well as do shifts in blood chemistry. So Paul was an expert on this. God bless him. Paul, if you didn't know, he was the fellow who discovered the hemline indicator, that as hemlines go up, the market goes up, which worked in the 60s. And also he reviewed 3,000 covers of Time magazine to find out that there was an 80% probability that if an investment-related store...
Uh-oh. Have we lost contact?
Hello?
Yeah, you're back. You're back. Sorry, a little bit of technical difficulty. We're back.
Okay. Well, what did you last hear? What did you miss?
We were just, you were talking about Paul Montgomery, and at the end of that, it was right after you had talked about him being in Virginia. So why don't you lead from, yeah.
He was the fellow who discovered the hemline indicator, that as hemlines go up, so does the stock market. And it was he who reviewed 3,000 covers of Time magazine and found if there was an investment-related subject on the cover, there was an 80% probability that within 3 to 4 months, the market discussed on the cover of Time would go in the reverse direction than that expressed on the cover of Time magazine. And in his later years, he found out that if it appeared on a non-financial publication, the effect was stronger. I mean, if it was in Business Week, it was weakened a little, but if it was so strong that it made it through to Life or Look or Time, that it had a heavier effect. So that was Paul. And if we can switch to the next slide.
This is where the market shifts are?
On some occasions, markets bottom on this date. So I start off market. It's page 3 in my PowerPoint.
Yes, I have it right here. There we go. 1 second.
Market shifts and fundamental developments do not always occur on this date, but here's the track record. On September 21, 1869, the Jay Gould Fisk gold corner failed, leading to a crash and a panic. In 1873, the crash was so bad that they in fact closed the exchange temporarily on September 21st in that year, 1873. In 1929, on that date, the utility stocks should be also the last group to top. I misspelled that. Oh, they were the last group to top before the crash, and they did so on September 21, 1929. Now, if we jump forward 2 years, on September 21, 1931, the pound was devalued 28% overnight. And here, I'm just on Bloomberg News, we have Angela Merkel on and talking about Brexit and the effect it's going to have on the pound. So here we are once again on this date discussing, and we just had a Fed meeting, which I'll discuss at the end. So if we shift to the next, now this is the stock, the Dow Jones Industrial Average closes only 1987, and you will note that the market topped on August 25th, but it bottomed on the 22nd of September on the vernal equinox before it made its last rise where the sea wave began. And right at the top there, I'll just, as long as we have the graph up, I'll go a little off subject, but August 25th, there was a 5-planet conjunction, which Arch Crawford used to very specifically pick out that day as the top 1 month in advance before the crash. The bottom was on the vernal equinox, which also happened to be a solar eclipse, and the top, which is October 5th, because I'll never forget this, I was at Payne Weber, was the date of a lunar eclipse. It was the date that Mars transited over the degree of the prior solar eclipse, and it was also the date of a number of heliocentric planetary pictures, which I won't explain, a concept developed by Larry Berg. But all three of those occurred on October the 5th, and there you see the decline. So once again, even though it wasn't the exact low of the high, it was the bottom of the initial, in Elliott terms, A wave or the beginning of the B wave. So if we shift to the next slide.
Okay.
Click to add title. I should have remembered to do that. Okay. The date played a part in the stock market massacres of October 1978, 79, I just showed you 87, and also 1989. Now, if we switch to the gold market, the metal topped in January of 1980, but the gold and silver stocks, the equities, topped on September 22nd, 1980. It was also the day of the high in many energy stocks. Now, jumping again to soybeans, they made a major low September 21, 1984. And the Plaza Accord began a dramatic run on currencies. Now, remember, Paul Wright wrote about this before it occurred. He predicted this on September 21, 1985. And he also notes this occurred exactly 54 years after the pound devaluation.
Wow.
So if we switch again, now here we have, I mentioned this above, but I just wanted to show it to you in case you don't know what part it played in the 1978 massacre. It was the low prior to the peak. Remember the 1987 graph? This is the 1978 graph. It was the low day, once again, just as it was in 1987, just before that decline.
Wow, this is really pointing to something really serious.
Well, let's shift to the next page. Now, here I focus on currencies. Now, it was Paul Montgomery, by the way, that started all this research. I'm just keeping it up since he passed away a few years ago. In 1992, the French vote on the Maastricht European Exchange Rate Treaty was set for September 20th, and the pound collapsed a few days prior to this date. So this wasn't exactly, but it's on the day, but it's close enough. Note that this date was 7 years after the Plaza Accord and 61 years after the 1931 pound devaluation. Now, switching to long-term capital management, that rescue took place on September 23rd, 1998. In 2001, the market bottomed. Here we go again. Bottomed just before another crack in the market. It bottomed on September 22nd after the 9/11 attacks. Now, if you want to move up to 2008, the filing for Chapter 11 bankruptcy protection by Lehman Brothers was on September 15th, 2008. Remains the largest bankruptcy filing in U.S. history. It occurred 1 week before the equinox date. Now, I hear an advertisement in the background.
This is it. We got to pay some bills, but you stay with us, okay?
Sure.
Thanks a lot, Bill. We'll be right back with Bill Meridian of Psychos Research.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, with Bill Meridian of Cycles Research in Vienna, Austria. Bill, I've got your slide up. It's the
about the currencies.
Yes. Go ahead.
Yeah. So this date. We went through that about the currencies, and we finished up with Lehman Brothers. So the net result, the important point to keep in mind is that such phenomena tell us when and not why crises might occur. Scientific studies demonstrate that subtle shifts in human chemistry occur on this date. These can influence decisions and actions made at these times. As a consequence, fundamental events frequently occur near these dates. In other words, there's a shift in body chemistry, so suddenly people may feel an urge to fix something or to do something that they had been putting off. And right now, just seeing what's going on Bloomberg behind me with the British pound falling as Theresa May speaks. Now, I think this is a low in the dollar, which would then be a high in the euro. And I don't think anything spectacular is going to come out of this as the other dates, but I think it is descriptive of a low. And the Fed essentially said that they are going to start cutting back on their portfolio of bonds, which means they will be withdrawing money. And of course, gold reacted sharply to the downside. But I will not feel comfortable with the stock market until we get to the end of October, because as everybody out there probably knows, October has seen the biggest declines in more so than in any other month. It is the most volatile month of the year, but it usually closes on the upside. And the only way, for those who read my reports, the only way I can see all these conflicting readings, which I've described it in the report, but not in our broadcast today, is to have a very short, sharp drop in the market of maybe 2 weeks duration. And I like to tell a story. When the 87 crash occurred, I called Arthur Merrill, who was an honorary member of the MTA and the go-to guy if you had any quantitative questions, a real grand old gentleman who wrote Behavior and Prices on Wall Street and introduced filtered waves. And I said, Art, I'm looking at this 87 crash. In judging a bear market, what do you think is more important, time or price? And he said, well, Bill, I know what you're driving at. I would think price. So I think, yes, I know what question you'll ask me, that this 87 crash is a completed bear market. It's not the beginning of one. It's a self-contained one. And so I think that might occur here in the month of October. So I still will not feel very comfortable with equities. And this past week, there were so many conflicting, when I wrote my weekly piece, there were so many conflicting things to resolve. There was a great increase in the AAII. Suddenly we jumped to 41% bulls. That in itself is bearish. Post-OPEC week in September, bearish. But you had an FOMC meeting, which is bullish. And so no wonder I think the market's going to close flat to down by the close today. And by the way, before I don't want to forget, I have an interesting story to tell about Paul Montgomery. He was at Legg Mason Wood, and so was the legendary fund manager Bill Miller. Now, when I went to ADIA, Abu Dhabi had given lots of money, hundreds of millions, to Bill Miller. And so that's how I got to know him. And 2001, as we know, the market came down. Well, Paul was an institutional broker with a small fund there. And Paul was up, I think, 2000 to 2002. I think he was up 50%. And, of course, he was doing total return. Bill Miller is doing relative return, which means if he's ahead of the S&P, like if the S&P is down, what was it down in 2000? Was it 15% or 16 or 18?
Yes,
he was down
close to 20, yeah.
He was down, instead of being down 20, he was down like 15%. And because he had outperformed umpteen years in a row, he got an ice cream and champagne party thrown by his company. Paul got called in 2002, and they said, how come you're up 50%? Bill Miller is the greatest fund manager on earth, and he's down 18. What are you doing that's wrong here? And he explained, well, I wish, and they could not, young people in companies that I don't have to deal with anymore, they couldn't understand. They were getting ready to launch an investigation of Paul for being up 50% in 2 years.
Yeah.
The other guy got an ice cream and champagne party. That's why he split. He split and he formed Montgomery Capital Management in 2002.
I don't blame him. By the way, I noticed here that you've posted a thing from your top 10 timer digest. We're really happy here because you're number one. We've also had Tom McClellan on.
That was last year.
Yeah, last year. And then you also have Stan Harley comes on all the time.
Well, Tom's number one right now.
Oh, he is. Very good.
Oh, he is. Yeah, last time I checked.
And where are you?
I don't know. I'm not out of the top 10. I got January, February wrong, and I've been bearish since the middle of August, which appears to be wrong but may turn out to be right. But once the way those rankings work, if you get a month wrong, if you're bearish and everybody else is bullish, they all displace you. They leapfrog ahead of you. It's very hard to make up that territory. So I don't think
I'll be in the restaurant business.
I guess it is a good analogy.
Yeah. Well, Stan Harley will be our guest next week, and he's always. I don't know if you knew Stan, but I
met Stan. Sure.
Yeah, nice fellow. He used to live there in California. Well, he still does. He's actually moving to Scottsdale now, and I've known him for 40 years back in the old days when we used to have the old cycle meetings. Bill, we have a question from one of our listeners about the gold. You've been quite bearish on gold. Even when it broke out, you thought that was going to be probably a false breakout, which it certainly has. We've dropped about $75 from the high. Any feeling on the gold here, what you're looking at? I mean, it doesn't respond to nuclear bombs or anything.
Well, I'd have to, by the market action, I'd have to be short-term bearish on it. But as I like to point out, if I can take the long-term first, gold is a commodity. It's a special commodity because it's a money. But very rarely do you get a huge bull market in commodities followed by another one. And gold had a huge bull market that ended in 2011, and that was only 6 years ago. And so the thought that we would have another, I think it's a trading range. I don't think it's bullish or bearish, but my friends here at Incrementum AG make a very good point. They said there are three conditions gold faces. That is a collapse of the banking system, in which case gold will go up because you don't trust the banks. That happens very rarely. Then you have the expectation of increased inflation. That happens maybe 20, 30% of the time. The rest of the time, if people's expectations if they look at the world and say, well, it doesn't look very inflationary, they have no real incentive to buy gold. And I think that's where we are most of the time, and that's where we are now. So gold is a commodity I think you have to trade. But right here, I'm still holding Newmont because the stock actually looks, the stocks can move a bit separately from the gold, the metal. And so I'm still holding that. But gold always tends to correct in the second half of October. It tends to be strong in November and top in December.
Okay. Now, have you ever noticed that the gold doesn't seem to respond to news about war? Have you ever any?
Yes.
Go ahead. You answer it if you can.
Well, you just caught me reading about news and effects on the markets. And Schiller, let me see if I can get his first name for you.
Arthur.
Robert J. Schiller.
I was thinking of Arthur Laffer. Yeah, Robert Schiller from Yale. Yeah. Yeah,
he says, according to his statistical research, 20% of price movements is related to the news. He says 80 to 90% of the price moves, and technicians will love this, are endogenous, in other words, contained within the market and the numbers itself. But news, 20% exogenous, that's only 20% of the price movements. So wow. I don't, try and relating news to prices can be very dicey.
Yeah. Hey, listen, we want to thank you for being on today, and we'll have you on again soon. And be safe over there, and give my regards to your lovely wife. And
I'll do that.
Hopefully we'll have you on soon. Thanks a lot, Bill.
Bye-bye.
You bet. Bill Meridian, Cycles Research, Vienna, Austria.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We want to keep an eye, of course, on the gold. It looks very interesting down here at the 1295 level. That would be a little 61% retracement of this range over the past 12 hours. Anything below 1291 is certainly a very negative thing to be looking at. But if you look at that gold chart, it does have some really good, let's post it up here again to take a look at it. It does have some really nice wave structure that we like to see. We had a 3 drive to a bottom pattern from the last several days also, and we'll see what it's going to be looking at close here. But we're trading around 1298 right now. If you could get down a couple of dollars, then you wouldn't have to risk more than just a few dollars to see if you're right. The problem is carrying it overnight. because that can be a little bit a big thing. So someone's asking me to do a shorter term chart on the gold. If you'll give me 1 second, I can do that. But the question is time, because we are really close to time, but I think I can do it. Let's just put a 15-minute up here, and you'll be able to see it. Ah, there it is. Let's see if we can get this into the room in time so everybody can take a look at it. Right now, it's setting right at the 50% level. Hold on a second. If I can get this over here, I got to get the camera lined up. There you go. You see we're right at the 50%. So at 12.95, you would be setting right at the 61% retracement. Then you could put your stop below 12.91. You don't have to risk about $4. But from this level, you got to risk about 10. I still think it's got the potential to get to the 13.22 level. That would be up, at least $17 from the low. So it's, be able to see if we can do that. But anyway, we'll do that at a later time tomorrow. It'd be Monday that we'll look at it to see if we can get that gold to move up a little bit higher. But anything below 12.91 is really bad. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.